Guillame, thanks very much for joining us here in London. It'd be good to get your take on, I guess, what you're seeing, particularly in the European market at the moment.
From a geography perspective, it's more focusing on sales than north as of now, with a strong view on Spain, Portugal, notably. Considering the asset allocation, it's the usual beds and sheds for sure, but it's also targeting the niche and the special investment situations such as self-storage, data centers, co-living, etc. And also, retail is back on the top of the shopping list for many investors, with a special consideration to long-term defensive assets such as retail parks or small retail malls, which still offers long-term cash flow, very good entry yield, and those assets have been hit by the retail bashing 10 years ago, and they've not so much suffered from the correction that has happened over the last couple years, especially since 2022. So 20% retail for allocation. I would say 50% usual suspects, a little bit of alternative, and obviously still that good old office to have a mixed bag portfolio.
And if we're looking at the capital flows, Guillame, what are you seeing? There was obviously a lot of dry powder built up. Are we beginning to see that coming back into the market? Is it mainly local capital? Is international capital coming back? What's your sense of that?
We'll have to go market per market, but from a general comment is that a lot of capital is still patiently waiting. When you look at the value-add opportunities, there isn't a few, because most of the, I would say, value-add play that could be done are, I would say, stranded assets, or basically assets that, even like 5 years ago, no one was really willing to pay a great attention to. So, and you don't really know what it's going to become, mostly, due to the urban zoning consideration and all the heavy lifting of renovation or restructuration that you have to do on that. And it doesn't always correspond to the timeline or the agenda of a value-add fund. So most of that money is still properly chasing, but still being really patient on that and cherry-picking opportunities. You see a lot of investment into platforms or schemes or initiatives, but it's trying to building along the way some special vehicle in relation to your strategy. Could it be, for example, co-living, developing self-storage, etc. But it takes a long time to allocate all of the capital that you're willing to have on that very strategy. And big missing is core capital. So we have seen signs last year of core players going back into the market, trying to take their marks and looking at the heat of the market. But I would say it's really those investors that are lacking, and that enable us to, I would say, to point properly, to address properly the market, and to understand also where the values are from an end buyer perspective. So as long as that core capital is still shy for many reasons, notably due to, I would say, sticky valuation as well, it's still uncertain how you can deploy core plus or value in money along the way.
Thanks very much for joining us.
Thank you so much.